G'day, Ziggy here, author of Money Does Grow on Trees, and I have with me on the podcast Chris Borg, who's the director of 3P Accounting and Tax. Mr. Chris Borg, welcome.
Thank you. Welcome back.
Good to have you on again. We had you back last year, and we spoke about a whole range of things, which was pretty cool.
It was good.
I do want to get an update on sort of where the tax office and what they're looking at, you know, for in the current season in this year. Look at some legal ways of minimising tax. And also, you've got a lot of exposure and a lot of work dealing with businesses here at 3P. So some of the the tips, strategies, what you've seen in helping business become more profitable. Maybe we can have a chat about some of the issues that businesses face, particularly when it comes to growth, right? Because that's whilst it's a good problem to have, it's always still a problem. So I want to unpack some of these points, but tell me what's happening at your end, sort of work-wise and business-wise. Where are you seeing things at the moment? Is there a theme that's coming across when you're looking at the accounting and tax and be at the tax office? Is there something that stands out right now, or not really?
Well, I mean, nothing particularly stands out. Obviously, I mean, there's many different issues that the ATO are looking at, whether it's from whether it's an individual tax perspective or whether it's the business side. What we do find is the ATO now, really utilising AI now in terms of their data matching, what they're picking up, what they'll be able to, want to audit on. Some good, not some so good in terms of how the technology is being applied. But I guess, and I think I might have mentioned this in the last podcast we did, is that the ATO, it's no longer randomly get picked up, or am I just getting picked out of a group of people. It's very, very specific now. There's reasons why if you do get audited, there's a reason why, and particularly now with AI, they pick up trends. Some might say that the ATO is better knowing yourself than what you would yourself in general. So they are very much on we've got to call it the war path, but they are understanding more about you. They've got their AIs working on social media as well, so they can pick up, like if you're posting on social media that you've got good cars or fast cars or big houses, and then you look at your tax return and you're not earning as much, that can get their attention. But even now, like I said, making sure that you do have your paperwork in order, because they find from their matching that you're not disclosing or putting in things that match your lifestyle or match your situation, it will bring to their attention. And then when you go through the audit process, as I said, if the story doesn't match up the reality, or you're trying to manufacture something that's not there, then it is likely to raise a red flag and possibly go against you. So that's the type of trends we're seeing. Actually, and making sure. So what I'm telling clients and what we tell our staff here is just make sure you've got all the paperwork, make sure everything's in place, everything's in order, and it does tell the story. And like I said, sometimes we get clients that come to us where maybe they've got themselves in a little bit of a pickle in terms of what they have disclosed or what they might have told. And the one thing we're telling clients now is, look, if you don't have something in order, something's not quite right, you've got to be upfront with them, because in the end, there's very little room to hide. So that's where we're seeing it. Sometimes when we see with the AI side, they're not necessarily always doing it, I think, accurately. So we've had a lot of situations this year where the ATO will send an amended assessment without warning, because they believe through the AI matching that the client doesn't have private health insurance. So the client will go in and say, yep, we have private health insurance for 365 days, therefore we don't have to pay the Medicare levy surcharge. But what we find is that the AI hasn't picked that up correctly. So they've gone and amended the return, and then the only way to fix it was we've got to provide an objection to that situation.
And I assume in that case you've got to object, you've got to lodge something, and it takes them a while to then look into it. Or are they fairly quick on something like that?
Well, some of like that, they are quick because they have mucked up. But yeah, again, AI does work well, but it's not perfect at this stage. But what the general message is they are getting better at it, and they are getting more specific. There is less room to hide. So again, that's one area we're picking up. So you've just got to make sure, in an ideal situation, before you start doing anything, before you communicate anything to the tax office, you've got your story right and you've got your paperwork to support it. If either one of those don't match, then you don't disclose it that way. You disclose it the right way. The other thing we're noticing as well, which is across businesses and personal, is the tax office are becoming more aggressive with their debt collection.
Well, the government needs the money.
They need the money. Well, both have said federal and state, but when you're talking tax office, you're talking federal. So, yeah, they are getting more aggressive. They're getting less tolerance. They came out of this COVID. Well, COVID was like, yeah, we're going to pause everything, allow everything to come back. But they are getting that time for that's over. They're getting more aggressive. They're issuing direct penalty notices a lot quicker. So, again, what you have to do is, before you lodge, if you feel, don't avoid lodging, so to speak. You get your lodgements done, and then just if you're going to struggle to pay, make sure that you would contact the tax office. If you're upfront with them, you're telling them your situation, and at least committing to some sort of put a payment plan in place. Something that you can realistically do, but don't just lodge and say, "Oh, I'll deal with the debt later," because lodgement's one thing, that's great, but without dealing with the debt, saying, well, the ATO would just be happy that we've lodged, that you've got to deal, you've pretty much lodged within, hours. Go online, go to the portal, or get your accountant to go to the portal, arrange a payment plan, because that at least gives you some time then to obviously either meet the payment plan, or if you need to update it, you contact the ATO. That's what they want. They just want contact. If you're not doing that, they think you're hiding and you're trying to neglect your obligations. If they feel you're neglecting your obligations, the ATO feel they've got no choice but to get the sledgehammer out, the DPNs,
To go harder,
the garnishee notices, the credit reporting bureaus. So, but engaging them, you'll be surprised how they will be cooperative, providing you're not shying away from those obligations. But what we have noticed as well, it's not always good what they're doing. Interest now is non-tax deductible, so clearly
That's already begun.
That's
right?
begun. They've begun on 1 July 25, because the ATO will say, well, we're not a bank. We don't want to be a bank. If you want a bank, go to a bank and claim that interest. But again, when it comes to interest remissions now, everything's got to be done in writing. And they, unfortunately, sometimes, when they're looking at it, you're not necessarily getting people who understand the situation and the scenario. There was a story recently of an elderly woman, an elderly lady in her 90s who lost her husband a couple of years ago, so she fell behind on her lodgements, which is understandable. They put a penalty in and then an interest remission. So they applied a penalty and interest for late lodgement. She put an interest remission request advising of her situation that her husband had passed away, and they didn't remit it on the basis that they couldn't be assured that it wouldn't happen again. Well, the husband passed
Unless
away.
the husband is resurrected and dies again.
So, luckily,
love that.
luckily, sense prevailed, but they had to go to the ombudsman to get that reversed. So that just shows you the mindset that they currently got. It's not a forgiving one at the moment.
Yeah. Are there any particular occupations that are a high risk of being audited?
Look, I would say yes and no. Like I said, it was, back in, 20 years ago when they didn't have this technology, there would be certain professions that were targeted because they were at higher risk of higher claims. But what we've found is now it's not so much that are higher risk occupations, but higher risk industries that might, for instance, be cash economies where they feel there's, people dealing with cash. So those are audited a bit higher, but mainly it's not so much the types of taxpayers, but it's trends within them. So, i.e., as I just said before, with the artificial intelligence, you've said you've got earning $40,000, but then you're driving a Ferrari and you've got a big home that you're flashing on social media. That's the type of people that will get targeted. If you haven't lodged for several years, they'll target
How
that.
come I haven't been targeted yet?
Because you obviously don't post enough, or you're reporting good income. So either way, but that's it. It's more trends. If you haven't lodged, if you got a lot of debt, or you've got high deductions. So the ATO have their parameters, what they believe you should be claiming based on industry averages and all that type of thing. So then if you go and lodge and you're 4 or 5 times over that will trigger an audit most of the time. But like I said, what I tell people again, you get your story matches your documentation, you lodge that way. Don't lodge anything different from that. There's no room for that wriggle room. And like I said, just because you've got a high claim, if it's legitimate, you lodge it. You don't, we'll just water it down because we might get audited. You go to auditors. Getting audited is not the problem. You've got to make sure that you do the right thing in that audit, provide all the documentation. So the only reason why you wouldn't do the audit, wouldn't want to claim it, is because you don't have the paperwork, or the story's not right.
Yes.
So that's the general message from that.
Yep. Okay. So the message, generally speaking, with the tax office is that they're not here to put the sledgehammer over your head unless they have to.
Yeah.
And so if you're communicating with them and you're working with them, and people get into trouble for a whole variety of reasons,
Yeah.
But if you're working with them and you're upfront with them, then they're more likely to work with you, as opposed to, as you said, sort of run away and hide, and they go, okay, well, this person is trying to get away with something and they're not even communicating. We have to go in hard and step things up. And I guess the best way of doing that is if you've got a good tax agent, don't talk to them direct, use your tax agent.
Well, that's right. So, as you said, the ATO much rather work with you because it's a lot easier for them. It costs them less, and they've got a budget that gets allocated to them. So if you're cooperative, and what the ATO are looking for, they're looking for quick wins. They're looking to tick the box and move on. So if you're being cooperative, they tick that box, it's easy for them. But if you're not being cooperative, you're not communicating, you're not picking up their phone calls, then they go to the sledgehammer and they go to it quickly because they don't want to get out of control. So like I said, the years of, you can leave a big debt, you can leave, lots of years outstanding. No, because they want to nip it in the bud. And a lot of people, I get a feedback, but my debt's only $100,000. There's people I know that have $1 million in debt, but they're not getting chased. The fact the opposite works because the $100,000 one's an easier grab for them. It's an easier one to deal with compared to someone who's got $1 million in debt. They leave that because they're probably thinking, well, they've probably got a lot more complications. It's going to be harder to have a win there. So they're looking for the ones that are in that sweet spot. So generally, the lower the debt, the easier it is for them to actually grab. So as I said, and as you said before, if you do have a tax agent, great. If you don't, then probably get one. If you are having to deal with the tax office, deal with them through your tax agent because, again, your tax agent should know what to say, how to say it, what information to give, because it's not a volume of information, but the quality of information is provided.
Yeah. Now we've started talking. There have been some business sort of discussion in there, but we've been talking about individuals, mainly in terms of tax deductions and so forth. Dealing with businesses, what are some of the mistakes you've seen people in business make when it comes to any part of the business? It could be the compliance part, it could be the marketing part, it could be not having a business plan in place. Okay,
Yeah.
what are some of the things that you've seen that you've had to fix?
Yeah. You're looking from a compliance side. I feel, again, comes down to that documentation and paperwork. So we find some businesses don't have adequate bookkeeping software, like using Xero or MYOB, just something that is all automated. We do find that, particularly when it comes to payroll. You really now, if you've got staff, you've got people, or you've got employees, you really can't actually operate a business without a bookkeeping program anymore, because you've got obligations such as single touch payroll. So every time you make a payment, you've got to lodge the payment summary to the ATO. You now, from 1 July, we've got payday super. So every pay, you've got to actually pay your super via the clearinghouse on the same day. Without software, that makes those obligations very difficult. Generally speaking, then it makes it difficult to lodge your monthly BASs or your quarterly BASs. So obligations become very difficult. Having a Xero subscription or MYB subscription or even QuickBooks enables you to have all your records up to date. So by doing that, come monthly BAS, quarterly BAS, having to do the pay run, single touch payroll, pay to super, everything's ready to go. And if set up correctly, you do your pay run, you can export your ABA file, pay your employees, click another button, lodge it to the ATO, click another button, pay your super, and generally sets up rightly, it deducts your bank account straight away. So and you need to lodge your BASs. Your accountant can log in, get the information, make sure that everything's reconciled beforehand, lodge the BAS. It's all done. So a lot of the reasons why businesses get in trouble because they don't have a bookkeeping software or they don't keep it up to date. They either don't have a good bookkeeper, they don't have time to do it themselves, or they don't allow their accountant to do the books. So it gets delayed, again, because it's too hard basket. You're trying to run a business. The last thing you want to do after a long day is go in log into your Xero and get everything reconciled. You probably start the day going, I'm going to go home tonight and I'm going to, reconcile everything, and then you get, it's too hard, right? So again, it's not only maybe you might have a bookkeeping software, but you're not keeping it up to date. And these days now with bank feeds, everything's feeding in. And Xero, as an example, has very good AI capabilities. It pretty much can do the reconciliations for you. So that's where we see it from a compliance end. What we see also from just a business management perspective, the lack of visibility. So if you, again, don't have a good bookkeeping program, or you have a bookkeeping program but you don't keep things up to date, you've got no visibility in your numbers. So you don't know whether you're doing well. People go, oh, well, we're busy. We feel busy. Just because you're busy, it doesn't mean you're profitable. Just because you're profitable doesn't mean you've got good cash flow, because you could be buying a lot of capital expenses that don't hit your profit and loss. You could be invoicing a lot. Your invoices, when you invoice, shows you've got very good profit, but your debt collection is no good, because you're taking your clients or your customers should be paying you in 7 days, they're taking 30 days because you don't have good debt collection processes in place. With our bookkeeping software, you're going blind. It's like, well, I think we're busy, but we've got no money. And that's, why am I so busy? Why do I feel busy but I don't have good cash flow? The other problem we see with that is a lack of working capital management, where it's obviously with working capital, not having enough cash reserves in the business, running basically working and not leaving a buffer behind in case your debtors take you a while. So again, not having enough, but at the same time, because you don't have that visibility, you're getting paid too much. You're not getting paid quick enough. Because you're not getting paid quick enough, that means you need even more reserves behind. And the other thing we find is as businesses grow, they become less efficient because they're having to rely on other people to do parts of their business. They become less efficient, become less profitable, and then the working capital requirement grows because your debtor book grows. As you get bigger, you're invoicing more quickly. That working capital window grows, and they don't either keep enough money behind, or they don't go and get enough of maybe an overdraft or something. And basically, without the proper working capital, they become insolvent a trading insolvently because they don't have that management. So we do tend to see those sort of problems.
One of the things that I found in working accounting and tax for many years, back in the day, as I say, is that there were a lot of clients who would bring in their books, but they saw it as more of just a compliance burden, and therefore you'd prepare the financials and they'd try and not give you all the information, so that they would wind up either at a loss or zero profit. And I'd look at some of the accounts and I'd say, there's a lot of potential here if you actually focused on it, and rather than trying to minimise your way completely or create a scenario where there's no profit or negative, or goes into negative. Instead of that, what you could be is be really positive about a good business, that you have, and grow it and grow your profitability. And yes, pay some tax, but create some serious wealth. Are you still seeing that?
Yes and no. I mean, I think the type of clientele that we sort of are attracting aren't so much like that, but you do see it because people do see accountants as to minimise tax, so they come very focused with questions around. They make business decisions that are based on tax. What we say is the tax, but you should drive your decisions based on the commercial things. And in the end of the day, make $1, make that dollar pay the 25% tax, rather than lose that dollar and not pay the 25% tax. Because in the end, you're still going to be out of pocket 75 cents.
Yep.
So again, that focus. The law is the law. You can't do much about it. And you don't want to be structuring your business operations to minimise tax, because you could lose profit as a result. So you, first of all, need to focus on, well, where can we maximise the business? How can we drive it to be in the best possible position? And then we can manage the tax legally to suit your situation, rather than the other way around.
Yeah. What are some of the, we talk about tax, and the legislation says that you shouldn't put the strategies in place to avoid tax, but you're allowed to minimise tax. What's the difference?
Well, I mean, we call them schemes or whatever have you, fraudulent schemes, that tax evasion. So that could be under-reporting of income, over-reporting of expenses that aren't there. It could be siphoning money off to lost companies, or putting money overseas. That's tax avoidance and obviously illegal. Again, businesses unfortunately do fall foul of being part of a scheme that's been promoted, and obviously generally the cards fall when that promoter gets caught, and then unfortunately everyone else underneath that, they investigate as well. So that's something we don't want to do, and something we don't do, and something we don't encourage, and certainly something we push away. Tax minimisation is completely legal. There's nothing wrong with minimising tax. And I think, as Kerry Packer said one time, well, if you want to pay, well, I'm not sure what the line was. You're a lot older than me, so you probably know what he said.
I am not evading tax in any way, shape or form. Now, of course I am minimising my tax, and if anybody in this country doesn't minimise their tax, they want their heads read. Because as a government, I can tell you're not spending it that well that we should be donating extra.
Again, in the so structuring to minimise your tax, again, is nothing wrong with it. Again, but providing that the strategies you put in place don't detract from the commercial realities of your transaction. So sometimes, you could do structures that, might have to go 4 or 5 entities deep just to minimise your tax, but commercially that's very difficult to manage. So again, whenever we look at a strategy, well, okay, is this going to help the business grow? So we've had situations where a business might be in a trust. A lot of the schemes have been in the past. We have a bucket company, we distribute to that, cap your tax at 25% or 30%, which with the new budget announcements might not be so able to do in the future, depending when the detail comes up. Now, people would do that on paper for forever and a day, but actually never pay the money, and then just have these circular loans going around, and then to deal with it, you have to set up structure after structure after structure. Commercially, made no sense. It was purely just to reduce your tax. However, if you're using that company structure properly, and as we say, people in business, you're not just in business to make a salary. You're in it to hopefully build a nest egg. And pay yourself more than just a salary. You pay yourself your salary plus your investment return. Well, then what do you do with that investment return? And that's when obviously we get you guys in with the planning. So, well, I might want to buy property, or I might want to buy a share portfolio. So, but it's not commercial to have that share portfolio property in my name, because I'm a director of a business. I don't want to also have it in my name and put that at risk. So you set up a company. You put that property in that company. Or you put those shares in that company, and then you've got a reason to distribute to the company. That's a commercial reason, no problems at all. So that's an example of where you can minimise tax legitimately, but have a commercial drive behind it.
Just on that theme about business, there's a lot more talk about these days about intellectual property and how you build that, but we know of there's a particular structure where you would keep your intellectual property housed somewhere differently as opposed to the operator. Just unpack that a little bit.
Well, I don't know if I should be now the IP expert that we know.
Yes, we've had him on before.
We've had him on
before, but here we're not going into too much detail.
No, that's okay.
Leave that for him.
Because I might embarrass myself compared to him, Barrett. So, generally, and I actually was speaking to a client the other day who messaged me and said, I'm thinking about setting up a structure for a company. Going, I just pick your brains about how to set it up. And when we started talking, it was very obvious, I suppose, that he wasn't going to, or they weren't going to be able to set it up themselves. So, because generally speaking, and this guest would have told you that why are we in business? We're not.
It's Dr. Maurice Rossetti for everyone who's on another podcast. Just check it out on the episodes.
Yes, Dr. M. So. What he says is, well, what are we in business for? Are we, as accountant, I'm an accountant, you're a financial planner. Are we in the business of doing accounting? Are we in business of doing financial planning? And what he will say to you is, well, no, you're in business to build a brand. Your brand, your IP, right? So every business, doesn't matter what you are, you've got some sort of intellectual property. It's whether you want to commercialise it and use it and, make money from that. And if you do, and it's not every business has the capability to be able to do that, nor the scale, right? But if you do, it's very important, and that's separated into a different structure. Obviously, in case something happens with the trading business, you can at least protect your intellectual property. The other thing is as well is you may want to have other business partners who want to utilise the IP that you've built. That's fine, but you don't necessarily want them to be part of the IP entity. That you may want to keep that to yourself. So you have a separate entity, the entity that trades. Yep, no problems. Be in business or shareholders with your business partners, but the IP you may want to protect. Just keep to your family, so you own all the shares in that. So it's very important you have that separation, and that gives you then the scope to do all the things you want to do with the IP.
Yeah, because that separates the asset, if you like, from the risk, and that's completely legitimate, right?
Exactly, and you've also got two types of value. You've got the trading business, which has value, and then you've got the IP, which has value, and that gives you more of your passive.
Yeah.
Your passive, and you know that's all your ideas and everything, that you've built from the start. Yeah.
Yep, that's good. If I'm a business owner, what are some of the numbers that I should know about my business, either weekly, monthly? What are some of those figures that I should be on top of, which will then enable me to make sure that I'm efficient, but also that I jump onto something that may need attention?
Yeah. So, look, every business is different, but what I always tell business owners is that you should be, and we're all busy in our business, but we should always be on top of our business and looking at it. And I always say you should meet weekly, monthly, and quarterly. Your weekly ones might be a quick cup of coffee, and if you're in business, for instance, could be a quick cup of coffee just to run over the numbers. Monthly, a little bit more formal.
You're talking with other business partners?
Other business partners, or
Okay.
even yourself.
Even yourself?
Even yourself, weekly.
I have coffee regularly, so I can do that.
Yeah, you can
myself.
do that. You get the bricky out, make the coffee. It's not
The
a problem.
Greek coffee.
The Greek coffee. But if business partners or not, but let's say in a situation we've got business partners, weekly, half an hour in the kitchen, monthly, more formally, and quarterly with your advisor. That with a set agenda. So some of the things you want to know is obviously in a weekly, what's your sales? What's your sales numbers looking like? If you're in a business that has direct costs, what's your gross profit? And then what's your net profit? They're very important. What's your cash flow position? So what's your actual your cash balance? How much debt you got in debtors? How much you got in creditors? And then with your debtors, where are they tied up? Are they all in your current? Are they in your non-current? And then or are they dragged out a little bit longer? They're very important. They all flow to each other because if you're looking at your sales, you might be growing. You're looking at your profit, you might be growing. But then you look at your bank balance and it's not growing. And why is it not growing? You go to your debtors, well, my debtors are ballooned out. Or I've gone to my balance sheet and I've got a lot of money in equipment that doesn't go in the profit and loss. So again, explaining those sort of things, just because you got very, very good profit doesn't necessarily mean you've got it doesn't mean you've got very good cash flow, right? And we always say the word cash is king, because it is. And we're not talking cash in the sense of under the pillow or under the mattress. We're talking cash in the bank. That's important, because without it, like I said, you can have the best profit and loss, the most profitable business. But if you don't have money in the bank, you're shutting the doors, and that's the biggest thing. So by jumping onto those numbers, you can identify where the squeeze is coming from. Like, again, it could be your because not everything that goes in your profit and loss goes in the cash flow statement. Until you've raised that invoice and the business and the money and you get money in your account, it means nothing. You got that working capital window. So again, you could be looking at your profit and loss very good, your bank's not going very well, but your debtors have ballooned out. That's telling you your working capital time frame from the day you start the service to when you actually get paid. That could be longer. And it could be as well, if you're in the service industry, your work in progress. It could be you're not really invoicing too well, but you've got so much work in progress. So again, you look at things, are we invoicing regularly, right? So if you're in the service industry, you could be an accountant, you could be a lawyer. How often are you doing your invoicing? Are you waiting for the job to finish? Or are you looking at your WIP every month and do progress invoices? So you've got to do in business whatever you got to do to turn that job or that work into cash. All right?
As quickly as possible.
As quickly as possible.
Yeah.
So it could be, again, and it could very well legitimately your sales have dropped off. Why is that the case? What are we doing? What's the market telling us? Do we need to stand up people off for a little while until we get right? It could be we're doing jobs and, what's the profit margin on every job? We're not making enough money, so we need to put our prices up. We need to reduce our costs. It could be our debtors have gone from an average of payment of 20 days to 40 days. Why is that the case? We've got to, maybe we're not calling them enough. You'd be surprised when you actually get on the phone to customers and said, we haven't paid, look, you got to pay this, how quickly they start paying it, because either they've forgotten or they've been caught, so they better pay. So, again, just simple things. And like I said, those weekly meetings might be underestimated. Why do we need to meet weekly? Because you just make those small tweaks, or you just pay attention to something, and things move.
As accountants, we understand the relationship between the balance sheet and the profit and loss, and it's something that I think it is important for clients to have some level of understanding, because they can then answer some of their questions or do a bit of analysis. But if they don't, it's good to speak to your accountant to be able to do that, who will then explain why don't I have any profit. Well, you're right, you're sitting in debtors, or maybe sitting in stock. Maybe you've paid down a significant part of the loan, so you can actually always explain it, because the debits and credits are always there, and a relationship is intertwined. I remember years ago when I was doing a range of seminars which were popular, and it was around wealth creation. So we talked about asset protection, wealth creation, superannuation, self-managed super funds, and it was to the medical fraternity, and mainly doctors and specialists. And so that became sort of, there was one of the associations that invited me along a couple of times, and I thought on this one occasion, I thought, you know what, I was passionate about clients understanding the relationship between the balance sheet and the profit and loss, and so that was my seminar that night for about an hour to the doctors. I didn't get asked back.
No, you didn't get us back. Well,
because it can be boring, but I think, all right, don't go to the detail that we go to, because we sometimes can be nerdy, but have an understanding of the relationship between your profit and loss and the balance sheet.
Yeah.
I reckon
and that comes down to financial literacy, and how much financial literacy you need to have on your business depends on the scale. If you're a multi-million-dollar business and you've got multiple entities, you need more financial literacy. It may mean you need to have a CFO or a financial or accountant in the business to run those numbers. But if you're a small business, you call your mum and dad, your tradies and things like that. You don't need to be an accountant to understand. But you do need to have that literacy. But what it comes down to, number one, is transparency. And that's why I come back to having good bookkeeping program, but also having good bookkeeping practices. So either do it yourself or have someone who can do it. If you don't have the time or the skills or the patience to do it, get someone to do it. Yeah, it might cost you a little bit, but it will cost you more not to have it. Because with clean set of books, it makes financial literacy a lot easier. And as I say to clients, when we meet on a quarterly basis, we have 3 or 4 key KPIs we look at, and it could be sometimes just understanding the connection between the balance sheet, the profit and loss, and cash flow statement.
Well, these days, something like Xero actually gives you that information. You can run a profit and loss and say, well, I want to see the cash flow.
Yes, you can. And Xero have an AI tool built in called Jax. You can it will give you analytical outcomes as well. So you can run and ask it to give you, to tell you about the performance of the business over the last 3 months, and it will give you a detailed analysis. You can tell it to forecast your next 6 months based on historics. It will do that automatically for you. So it's not like the days, like as you explained, people would come in with the shoebox, put everything in, then 4 weeks later we'll tell you about something that happened 6 months ago.
Yeah.
It's now, like I said, if it's clean, the only thing that's going to stop a hold up from this, if it's not clean. If it's clean, anyone at any time should be able to log in and you get that information.
Yeah, no excuse, Danny. No excuse. See, there's no excuse. You got Xero, you got so much by the way of software. No excuse in terms of knowing your numbers, and it's in your best interest if you do. Hey, just as we're finishing, a few rapid fire questions. Are you up for it?
Well, it depends what you're asking.
Now, I know if it's football related and it's Carlton, you'll go through it like that.
Well,
but
maybe.
Let me check
not
a few
this
others.
season, we're not. No.
Maybe what is the biggest tax myth?
From an individual or business perspective?
Either one.
Well, I mean, again, people probably thinking that the ATO don't know everything about you or don't know certain things about you, because they do. They will know a lot of things about you that you probably...
I think there's a lot of government institutions that know a lot more about us.
Well, they
than
call
we.
it Big Brother.
Yeah, Big Brother.
They know. If you think they're not going to know, they'll know.
Yeah.
They can tell. Well, the biggest, one of the biggest things we get from an individual perspective, we've got the logbook method of the motor, the motor vehicle. Oh, but we don't, to claim logbook, we don't really need a logbook, do we? You definitely need a logbook, because again, if you try and do one later, the ATO will know.
Yep. Worst business habit. What's the worst business habit maybe you've seen?
Not having disciplined, not having disciplined policies around paying the actual directors or themselves. I think, a lot of businesses will either, not put themselves on a formal wage, particularly a company, and will just take drawings haphazardly, one of the things you need to do, or they don't pay themselves enough. And one of the things I always go back, well, if you weren't in the business, right, who would you be? You'd have to someone replace you, and how much would you be paying them? And they're not going to accept something less. You got to treat your business like it is. It's an investment, all right? Yes, you do want to get paid, but you don't want to just get paid your salary. So you got to pay yourself what you're worth. So the biggest the problem is that people don't do that, and they get in this bad habit of not paying themselves what they should, or they pay themselves too much, and they don't necessarily withhold the tax or pay themselves super. So that's probably some of the things I see that get them in.
Let's just finish off on the profit versus growth in business, because there's every temptation to say, okay, well, my business is profitable, I will draw that profit out and take it personally and use it and enjoy it. But the alternative is to say, okay, I want to really build this business rather than just completely drain it every year, so it actually can grow. Do you see many people doing one or the other?
Yes, I do. I mean, I think again comes back to the working capital requirement, but also understanding what your true profit is. And again, it comes back to, you ask the question, what business, the bad habits is actually not paying yourself what you actually should be paying yourself. If you had to pay someone else, what would you be paying them? Because then you don't get your true profit. So if you've got a business where you're not paying yourself a salary at all and you're making a profit, that's not actually a profit, right? So what is the profit after paying yourself? Or even businesses that are in trusts. Generally, trust, if you've got a trust, people will pay themselves distributions, which is totally fine. Obviously, if the new budget announcements may need to be revisited how you do that. But generally speaking, business owners will take drawings or distributions which sits on the balance sheet. So what I tell business owners is still put that distribution on the profit and loss, even though from the statutory accounts they don't sit there. So you actually see, well, if I wasn't in the business, this is what my true salary and wage cost is. Then you can actually see your profit, all right? And then you can make decisions. This profit, all right, I should be paying that out as a dividend. It's not a salary. I've paid my salary, right? The rest I'll do is now I'll pay this out as or I'll reinvest half of it, because, again, as the business grows, all right, I'm going to need more working capital, or I'm going to have to keep my debtors in a lot quicker as a result. So if you don't do that, though, and you're not paying yourself properly, the problem is you can't really see that profit. And what I then see happen later on, particularly when businesses want to sell their business, their books aren't it's like anything. You go sell your house, you're going to get it styled, you're going to probably get it painted, you're going to get it cleaned. When you go sell your business, well, you need to present it. And so your books is your house. You have to get your book styled before presenting it to a potential purchaser. So again, you need to understand properly, put all your wages in, because what people want to know when they're looking at a business is, if I wasn't here and I was buying this business, what's the true profit? Because I'm not buying a business, and I tell my clients this all the time, you don't buy a business to pay yourself a salary. You don't base the value price on that. You buy it based on what return is it going to give me, what growth. And you can't know what that growth is until all the wages are put in. Once you know your growth, how much of that growth do I need to reinvest? How much can I take?
Yeah, and then you've got the situation where if people aren't doing that properly, then they end up having they start hating their business, because it's just all of a sudden, I'm not making an amount, I'm working my butt off, and if I was working for someone else, at least I'll be a salary.
Yeah.
And be
that's right. So the business should be facilitating your lifestyle, not the other way around. But at the same time, and there's nothing wrong with paying yourself more than what you're worth, but you need to understand what the numbers look like on a normalised basis before you do so.
So depending on the size of the business, you really need to have management accounts and management reporting so you can run the business properly. Yep. And then the statutory accounts for the end of financial year are completely different.
That's right. So that's lodged for tax purposes or audit purposes or whatever have you. And again, if you've got a zero program or MYB, you can template those. You don't even have to do anything. As long as the numbers are reconciled, you press one button at the end, and that's when the financial literacy comes in place. You've got it set up. Doesn't have to reinvent the wheel, something very simple, so you're understanding. So again, the management reports, as you said, there's no accounting standard set to that. You can set that up any way you like. You set it up in the way that you can understand your business. There's nothing wrong with that.
We've come to the end. Thanks
Already?
for coming. Oh, we have.
You told me 2.5 hours at the start. Oh,
hey, it's not Joe Rogan. Thanks for coming on. It's been good to chat again, just in terms of, where what the tax office is looking at. It's good to know that it's good to know that they have got a lot of information on us, in the sense that at least we're aware of it, and that can be a positive for us. It can also be a negative, but also some of the areas that they're looking at. Because at the end of the day, you don't want to take on the tax office a fight. You're not going to win anyway. So let's be, just sensible with the way that we run things, the way that we pay our tax. Make sure we're profitable, make sure we're prosperous and enjoying life, and then pay some fair share. So it was good to talk about business as well, and some tips there around the numbers and profitability versus growth, and cash, where there's profit and no cash. So it was good to have a chat. Good to have you aboard, and we'll catch you next time.
No worries.
Cheers.